What does technology mean in all likelihood for your workforce? Again, a year from now, where would you expect to have more people employed and where less?
There's a basic fundamental shift now that we've kind of gotten to a certain level. So if you go back a few years ago when we had 50 to 60,000 people working on the mortgage stuff, and that's largely come down. And you had shaping down the collections efforts and stuff, that's largely come down. And so if you think about it, we're at 208,000 people now, and it drifts down now, and it's largely just through attrition and replacement of operational process being digitized by the customer. When the customer takes a picture check and sends it in, that saves that side, or by us taking paper out of the system and digitizing it and applying that in more efficiency in the process. So this is just a lot of things we call a project we call SIM, not a series of projects we call SIM, Simplify and Improve. And it's just they're not billion-dollar investments. These are 10, 5, 7, $12 million investments that generate lots of return by taking technology and applying it in many more places. And it's kind of fascinating. And so it'll just keep going on. And meanwhile, we hire 20,000 people. We hire a lot of salespeople, and so you're building the sales component. So if you look across time, we went from 100,000 people to 60,000 people in our retail environment, but the salespeople went up from 12 or 15,000 up to 25,000.
Well, that's what I was asking. Under the 208,000, let's assume for the moment that's just a constant. What proportionally will there be more of, and will there be less of? Where is the business headed?
If we do it right, and the economy continues to grow, we'll have more relationship management people in the branches, more in the wealth management business, more in the commercial banking business, and more in the cash management business worldwide. Commercial banking and stuff a little bit more worldwide, U.S. domestic hiring. And so it's all the relationship businesses and the relationship sales. We just keep adding people because in the end of the day, that's not electronic, that's a person-to-person, sitting down with the customers and there's lots of market opportunity.
And if you keep the overall level the same, where does it come out of? Basically back office?
Yeah, back in middle office too. Yeah, we're working on our loan underwriting capabilities in commercial, and you can apply techniques to simplify and then digitize a process that is pretty manual. It sounds hard to believe, but you have double entry of things manually just because there's a lot of work going on, and to get it right. So we have somebody enter it and somebody check it. We will automate parts of that. And by the way, it's pretty automated now, but there's always parts you can work on.
If you take your four main lines of business today, consumer, global banking, global markets, private wealth management, will those proportions of your revenue and profits be roughly the same 12 months ago, or do you see some of those growing compared to others?
If you look at it broadly speaking, for the first 9 months, it's pretty simple: 5, 4, 3, 2. 5 for consumer banking, 4 for global commercial banking, 3 for markets, and 2 for wealth management. So it just happens to fall that way. As you look at businesses, the consumer banking business is going to be the biggest banking business. It's in the biggest economy in the world. It has great sizable market shares. And so it'll grow, and the interest rate environment moving up will help it the most. And so it'll be a little bit bigger. When we think about the businesses, the markets business, we give some constraints to. How much of our balance sheet can be dedicated to, largely because of all the capital rules. So a third of our balance sheet, Tom and the team have, and they can have so much risk and so much equity, and they do a great job of that. So it incrementally grows. The rest of the businesses, they can grow as fast as they want. It won't change dramatically. Mix. Consumer will earn a little bit more money in wealth management because the way the rate structures go through the company, they'll make more money. But all of them earn their cost of capital. All of them are growing. All of them are managing their expenses well. And now that we've gotten the stuff that was sort of discontinued way down there, it's why you're seeing us earn $5 billion a quarter.